We all know how tough it is to predict the cryptocurrency market. But with financial giants like BlackRock, JP Morgan, and Goldman Sachs entering the space, these big corporates may have become a big market driver. The negative volume index is said to be a great indicator that helps us trade with the institutions. That's why today, we are going to look into the NVI with channel indicators as a strategy and see if this can generate some good results. If you want to try it out yourself, the free access link is in the description. So, without further ado, let's dive in. Let's start with the core of this strategy, the negative volume index. This index is based on the idea that institutions drive the market on low-volume days. So by watching the price movements during these times, we can get a sense of their sentiment. So how do we interpret NVI? We take the 200 EMA of the index as a benchmark, and if the NVI is above the line, it signals the institutions are bullish and vice versa. But the NVI alone is not good enough. That takes us to the channel indicators for confirmation. We incorporated two channel indicators in this strategy, the Bollinger Bands and the Keltner channels. The two channels have a very similar structure, both with a moving average and an upper and lower band indicating volatility. The difference lies in that Bollinger Bands are based on simple moving average and standard deviation, while the Keltner channels are based on exponential moving average and average true range. With the channels, it's considered a buying opportunity when the price reaches the lower band, indicating a market oversold. Now we know how the concepts work, it's time to put them together as a trading strategy. This strategy enters the market when both the NVI and channels signal an opportunity, specifically when the NVI goes above its EMA line and when the price reaches the lower band of the channel. By default, we exit the position when the NVI goes below the EMA line, but you can also set the take profit and stop loss in the settings if that's what you prefer. Finally, and most importantly, let's talk about the results and findings when using this strategy on Bitcoin. To start, this strategy capitalizes on breakouts. While it has a low win rate across various settings and timeframes, usually under 50%, it still generates impressive profits. So, how does this strategy perform across different timeframes? The hourly timeframes are where this strategy gets the wins. It strikes a great balance between market noise and trend reliability, generating incredible results. On the other hand, the 15-minute and daily timeframe is where this strategy struggles, showing losses most of the time. When we look at the profitable hourly timeframes, the performance tends to get better as we move to longer timeframes. In the 1-hour timeframe, profit averages 39%, which is already pretty good, but it goes up to 69% and 588% in the 2-hour and 4-hour timeframe. Especially when we use the 300-day NVI range with Keltner channels, we see a jaw-dropping 692% profit in the 4-hour timeframe. Although the Keltner channels showed the best result, it's not always better. Bollinger Bands shows better overall results in the 1-hour and 2-hour timeframes, adapting well to short-term volatility, but struggles with consistency over longer periods. To wrap up, this strategy utilizes NVI and channels to target breakouts during consolidation phases, resulting in lower win rates but significant profit potential. Performance can vary greatly depending on the time frame and settings, so we encourage you to give it a try yourself. Free access link is in the description. Thanks for watching, and we'll see you next time.